Good morning, traders. How we doing? Welcome to the SPACs Attack, where we talk everything SPACs. And if you guys are ready for the SPACs Attack, give me a thumbs up. I know we've been seeing stocks rocket all around in the SPAC industry. This is why we do what we do right here on SPACs Attack, is get you guys the information so that you can be informed traders out there. So start us up with a thumbs up, hit that subscribe button, and let's get the SPACs Attack started. How we doing out there, traders? Welcome. Let's go ahead and bring in my man, the brains to the show, Chris Ketchy. What's going on, man?
What's going on, Mitch? Yeah, happy Tuesday to you. Yeah, I mean, a lot of stocks ripping. We've seen some trends come back positively for SPACs and de-SPACs. So we got some great headlines. And Mitch, we also had a deal announced today. And this was a big one. Someone's already calling it out in the chat. Hurt Scrambler there, SBEA. So we will dive in and hear all about that deal announcement this morning, too. That was a hot one. We were up around 50%, now up over 20%, but a well-known brand going public.
Oh, no, it looks like I got my deep tone. It's Darth Mitch again. Looks like we got it, Chris. Looks like my voice was perfect on live trading, was perfect pre-market prep. Now we get the SPACs Attack. Looks like my mic is messing up a little bit. I'll do my best to stay out and I won't interrupt so much. Super excited. System1, we're going to get into marketing today. You know how I like marketing, Chris. I've talked about certain ones before in this industry. We could talk about the big boys, TTD, MGNI. I've talked to PubM. And we'll talk about System1, getting into it. So if you guys don't know what the stock is, stay tuned. You'll find all about it right here on the SPACs Attack. So let's go ahead and let's get into these headlines. Chris, first things first, take us back, inform us, and of course, Darth Mitch will go and hide in the back.
All right, guys. Yeah, starting out with headlines today. Up first, we have UTZ. So Oppenheimer maintaining an outperform rating on UTZ brand, lowering the price target to $20. And UTZ actually had news today, too. They announced the acquisition of R.W. Garcia. So this is going to expand their production capacity and also enhance their Better For You portfolio. So all of R.W. Garcia products are non-GMO verified, gluten-free, low sodium, kosher, and free of artificial additives or preservatives. So again, it's also going to help with supply chain synergies, right? So that could be important as UTZ looks to expand. And now their Better For You segment will exceed $100 million on an annual basis. So UTZ getting the acquisition announcement today. We have Fisker, one that we highlighted on the show yesterday, of course. Fisker announced that they secured a long-term battery capacity contract with Contemporary Amperex Technology Co., also known as CATL. This is for the Fisker Ocean SUV. So this is 5 gigawatt hour annual battery capacity that will be used in the ocean. That's a big deal, right? When we talk supply chain, and Fisker now getting a battery deal for that Ocean that they will be unveiling at the LA Auto Show later this month. So keep an eye out on Fisker on that news. Then we have Lightning eMotors, ticker ZEV, announcing that they partnered with Siemens to offer level 2 charging stations. We talked a lot about charging infrastructure plays yesterday, right? Charging stations, charging connectors, and Lightning eMotors, no stranger to the EV space, getting a nice partnership there with well-known Siemens brand. Then we have PaySafe, PSFE. The PaySafe platform launches with Superbook Sports in Colorado and New Jersey. I know there's a lot of fans here in the chat that are familiar with PaySafe, and PaySafe, a payment solutions provider for many of the sports betting companies. So another deal signed by the company here. We have Polestar going public, GGPI. So they had a tweet out today. It said Polestar now has 20 locations in the US, open and delivering cars to our customers. By the end of this year, there will be 25, and Boston was the latest to join. Welcome to the family. We talked about GGPI yesterday, right? Polestar, they already have vehicles on the road, but they're adding retail locations. That could be a big deal, right? To expand that brand awareness and get more vehicles out there. So 20 now open in the US, 25 by the end of the year. Keep an eye out, GGPI. And we have AUS, which is bringing WinBet public. So I saw a tweet from Ryan Butler from The Athletic. He said WinBet is partnering with Delaware North for West Virginia online sports betting and iGaming. So WinBet is live in Arizona, Colorado, Indiana, Michigan, New Jersey, Tennessee, and Virginia. They now have market access in 18 states. So keep an eye out on AUS. And we have PPGH, which is bringing GoGoRo public. So this is the battery swapping company that's operating in Taiwan. And as you heard me say, when they announced this deal, they had deals to bring the company's technology into India and China, two huge markets, right? Well, the news out today is that Gojek, the largest mobility and on-demand platform in Indonesia, is partnering with GoGoRo on a battery swapping and two-wheel electric vehicle pilot in the country. So Indonesia is the third largest motorized two-wheel market in the world. 7 million vehicles sold per year, less than 3% electric vehicle penetration currently. So as part of this deal, Gojek is going to invest in the pipe on GoGoRo. This will be a pilot of 250 smart scooters and 4 battery swapping stations located at gas stations in the country. If that pilot goes well, it could scale up to 5,000 scooters and more battery swapping stations in the future. Again, that ticker PPGH, bringing GoGoRo public. When we turn to our deal announced today, this ticker is SBEA. It was the high flyer this morning. Company is bringing Black Rifle Coffee Company public, valuing the company at $1.7 billion. SBEA shareholders will own 18% of the company after the merger. If you're not familiar with Black Rifle Coffee Company, it is a well-known brand, has over 1.9 million lifetime customers and over 270,000 active coffee club subscribers, 9.1 million followers across its social media platforms. Has over 50% of its employees are veterans or spouses of veterans. That's something the company prides themselves on. They sell their ready-to-drink coffee in several national retailers, including Speedway, 7-Eleven, Sam's Club, Walmart, Publix, Bass Pro Shops, and Cabela's. They are a top 4 brand in the ready-to-drink segment for convenience stores. So growth going forward, right now they get their revenue split 82% direct to consumer, 16% wholesale, and 2% outpost, which is the company's retail stores. They see opening additional outposts and adding retail stores to their wholesale business as the key growth drivers. So by 2023, they see this revenue being split 43% direct to consumer, 35% wholesale, and 22% outpost. They plan to have 16 outposts open by the end of this year, with 7 currently opened, including 4 franchises. And by the year 2023, they have a goal of having 78 outposts open. So the company had revenue. They expect revenue to be $230 million in fiscal 2021, up 40%. They have a gross profit of $69 million last year and forecasting $92 million in fiscal 2021, with gross margins of around 40%. So revenue grew at a compounded annual growth rate of 67% from 2019 to 2021, and they are guiding for revenue to grow 37% annually from 2021 to 2023. Shares, as I said, were up 40 to 50% this morning. If I look right now, it looks like we are up 19% today. And then turning to the calendar, we do have deal votes today on several SPACs: SWBK, MOTN, RTPY, and KVSB. SWBK already reporting that 42% of shares were redeemed, and KVSB voting 13% of shares redeemed. That's what I've got, Mitch. A lot of headlines there in SBAEA, the deal today. I'm not familiar with Black Rifle Coffee Company, but, based on the move we saw in Dutch Bros, right? BROS, which I know is something you've covered a lot. There it is right there, right? And you covered it on Money, Mitch, so well, right? And we saw that stock take off based on 9.1 million followers on social media. They've got an NPS score of 78. Black Rifle's doing something right. So I think this could be a SPAC to watch, right? With that brand awareness.
100%. 100%. Something to keep on watch. One thing is with these coffee plays is I've been noticing Starbucks slightly starting to go out of favor as being just the hip coffee to drink. And so us consumers, and especially, millennials coming up, Gen Z coming in, we're looking for something else. I don't think we're looking for Starbucks. Could it be Bros? Could it be Black? We're going to look to see what happens. Black Rifle, from what I hear, is super strong on caffeine. And we know how that trend is going.
Yeah, I heard Ryan say that it was a nice kick, right? Very strong. We got Tiny Pie Media in the chat saying it's like craft beer, but now it's craft coffee. Yeah, the trend, I think, is to have that brand awareness, right, Mitch? I think you're right that people want to fall in love with the brand. They want to know the brand and they want to be loyal. And Starbucks just may not have that brand recognition anymore, in terms of loyalty. So I'm following this deal with Black Rifle. What's that? We got to find a Black Rifle coffee company, right?
Exactly. We got to be able to get it delivered to my house. Consumers want it, right? Direct to consumer action. I know Matt Higgins would give me a big thumbs up right now. That's what it's all about. DTC. Can they get it to me? I want to hear about that. And we'll look into the S1, see what we see there. And we'll find out exactly how you could get Black Rifle coffee yourself. So
definitely
we'll find out. All right, Chris, now is the time. Up next, we're going to be getting into it with System1. We got Michael Blend in the back, but I wanted to put on a quick video here to talk a little bit more about the company. Might help you better understand it right off the back. Let's go ahead and play this.
Today's consumers are bombarded with advertisements for endless categories of potential purchases. However, in any given moment, a particular consumer is only really in market for a couple of specific products or services. Advertisers continually are trying to acquire new customers. But any specific advertiser is limited by consumer demand, seasonality, and the economic cycle. Introducing System1's responsive acquisition marketing platform. System1's RAMP technology solves these problems using proprietary algorithms, intent data, and auctioning technology to identify precisely what consumers are in market for at a particular moment in time. RAMP is vertical agnostic and automatically shifts between hundreds of verticals as the market dictates. We are not bound to a single product offering like insurance or cars, nor are we subject to the volatility of a single market. Here's how it works. First, RAMP seamlessly integrates into every major digital advertising platform, generating ad campaigns and attribution to track every step of the conversion funnel. The platform uses natural language processing technology and proprietary consumer demand and intent data to generate a best-in-class ad aimed at a specific vertical. The advertisement is then appropriately priced and sent to the selected buy-side ad network or publisher via the RAMP API. Next, the target audience sees the ad creative, and a consumer with purchase intent clicks through. The consumer is now within the System1 ecosystem. With AI-powered fraud detection, a host of content-rich websites, thousands of potential monetization options, and proprietary auctioning technology, we show the optimal experience to the user. RAMP records all conversions and associated data. Millions of rows of first-party data are collected and fed back into our machine learning algorithms, all while respecting consumer privacy. The platform performs millions of optimizations each day, continually improving the marketing funnel to maximize relevance, conversion, and scale. The most advanced, responsive acquisition marketing platform. This is RAMP by System1.
All right, guys, there you guys had a little preview there. One thing that I wanted to do is give you guys that, not necessarily to more promote for the company, but necessarily for you guys to understand what this company really does, right? I mean, a lot of us hear about marketing and we just don't understand how they go about it. I think this is also a good thing in learning, because right now we're in this kind of battle right now with data, right? And private information, how we're moving forward. And I think this is something to help you guys understand definitely how they target us in the first place, right? I mean, we want to know how it works, right? So let's go ahead. Let's get at it, Chris. Let's bring on Michael.
Awesome, guys. Another exclusive interview here on SPAC Attack. Joining us on the show today, we have Michael Blend, the CEO and co-founder of System1. Company is going public with Trebia Acquisition, ticker TREB. Michael, welcome to SPAC Attack.
Chris and Mitch, super happy to be here. I'm a big fan of the show. And thanks for the opportunity to talk about System1 and introduce our company to your viewers.
Yeah, definitely. It's like always, it's in an area that I've been looking forward to as we keep going more digital, and digital advertisement keeps going to that side. And we want to learn more. And there's going to be more companies coming out. So I appreciate you coming on, and I'll let Chris take lead here.
All right. So, Michael, one of the first questions we like to start out with here on SPAC Attack is, why the decision for System1 to go public via SPAC, and was a traditional IPO also considered by your company?
Yeah, great question. So yes, our companies, we're not really a story stock like some of the SPACs that you see out there that have great stories. We're not only a fast growing business, but we're highly profitable. So we've got our financials are over $700 million of revenue, $100 million of EBITDA. We're projecting this year. And so we definitely had the option to go public via traditional IPO. We looked at direct listings as well. Our SPAC deal with Trebia came about because I was introduced to Bill Foley. I think Bill, you mentioned a couple of his other deals earlier in your intro. For people that don't know Bill Foley, he's one of he's got a really long history of building some mega companies in the public markets. Super well respected by the capital markets. And so I was introduced to Bill by a mutual friend. He really educated me on SPACs and the benefits that they could bring and the unique way of getting companies public. So he was looking for a platform that he could scale in the public markets. That's what he does, is scales platforms. I was looking for a investor and partner that was really well respected in the capital markets. So we decided to do this deal. We announced it in June, and we're super excited about working with Bill and his team.
Awesome. Yeah, I did see that Bill Foley will be joining the board of directors upon the closing of the merger. We, of course, know that name well here on SPAC Attack. As you mentioned, Bill Foley's done several SPAC deals out there, so a big name in the space. So let's dive into System1. So the portfolio includes, over 40 digital properties. And, among the biggest, we have MapQuest, Info.com, How Stuff Works. Tell us about System1 and highlight some of those brands in your company's portfolio for us.
Sure, absolutely. So System1, what we do is omni-channel customer acquisition. It was highlighted in the video. What that really means is we're in market spending over $500 million a year on digital marketing with networks like Snapchat, Pinterest, Reddit. TikTok's an emerging channel for us. So really wherever consumers are. And what happens is people see our advertisements out there, click on our ads, and then come into our network of properties. You highlighted some of the more well-known ones like MapQuest and How Stuff Works, Info.com. And then consumers get to our properties, read something about, related to the ad they just clicked on. So they might have clicked on an ad for a home warranty product. They'll read an article or review about home warranties. And ultimately, by doing that, we're able to make sure the customer is really looking to buy something. At that point, we send the consumer on to our advertisers. That's how we generate revenue. We have another really big part of our business, which is our subscription business. So the way that operates is it's the exact same customer acquisition funnel. You'll see an advertisement out there and go through some properties we have. But ultimately, you go on to purchase one of our subscription products. Our largest and most well-known subscription product is an antivirus security suite called Total AV. But when you add it all up together, we've got a really large advertising business, but we also have a super fast-growing subscription business that complements it.
Perfect. I want to take a look at, the diversification of the business. That's something that, drew me in this presentation, is that based on those, 40 different digital brands, you're not tied down to one sector in terms of revenue. And then also, as you mentioned, you're getting the revenue from several different areas. Can you just talk a little bit about, this slide here, these very colorful pie charts, why that's so important to have this diversification amongst segments here?
Yeah, thanks for bringing that up. So since we founded System1 in 2013, we've been highly focused on building a diversified business. We think it's the right kind of business to have in the public markets. What I mean by that is that if you're really big in customer acquisition in a particular vertical, like home mortgages or home refinancing, that's great when interest rates are low and everybody's refinancing their home, but it can be a little volatile when interest rates go up and people stop refining. So what we've done is our business revenue is diversified across more than 50 advertiser verticals. The way to think about that is we basically track the economy. So as things like new car sales are getting hot, then car sales would be a big vertical for us. And then as in health insurance starts spiking in Q4, we're big in health insurance, but we're never going to have the real volatility that happens from economic changes and the change in the economic cycle. And then on the traffic acquisition side, where we do our marketing, we market everywhere. So we'll be on Google, Bing, as I said, Pinterest, Snap, Reddit, wherever people are. And so as people are shifting around, like, we're seeing consumers shift over to TikTok these days, we go over on start purchasing advertising on TikTok. And so by having that diversification, we feel like we've built a business that's pretty rock solid for the public markets. And then our subscription business, I think as your viewers know, subscription businesses are really highly predictable revenue streams because consumers are renewing their subscription on a predictable basis. So combine that with our advertising business, we've got a rock solid company.
Perfect segue there. The subscription business is my next question. As part of this SPAC merger, System1 is, combining with Protected.net, which is a leading developer of security and privacy subscription products with over 2 million paying subscribers. Can you talk a little bit about this acquisition and why it's important, the continued growth of the subscription model for your company?
Yeah, absolutely. In around 2018, System1 was primarily an advertising business, working with advertisers. And we decided that we wanted to take our RAMP marketing platform. And in addition to sending customers to paying advertisers, we would start sending them to our own subscription products. We did that by virtue of making a majority investment in Protected.net. They've got an amazing team. Got some magic in really building subscription products from scratch. In 2016, when that company was founded, it had 0 subscribers for their products. And now in 2021, fast forward, there are over 2 million subscribers, making it one of the largest, fastest growing security suites in market. And with our SPAC deal with Trebia, we're able to fully acquire the business and bring it into the fold. So we're super excited about the acquisition of Protected, and we're going to be a really strong combined company.
Perfect. I just want to talk a little broadly right now. The U.S. digital advertising business was $150 billion in 2021. And according to your presentation, it could hit $278 billion in 2024. You mentioned, following the trends, right? Snapchat, TikTok. Give us the behind the scenes. How does System1, get to where the puck is going, right? In terms of the advertising growth, how are those trends captured?
Well, first of all, there's just enormous tailwinds in digital marketing as a whole, but specifically where System1 plays, which is in customer acquisition. You've got this like billions and billions of dollars flooding in offline into digital, and that's not going to slow down. So the way that we're able to kind of go where the puck is headed, skate where the puck is headed, is we're in market in really almost every even small potential customer acquisition channel. So something pops up, people talk about TikTok, which didn't exist a few years ago. We're going to be buying advertisements wherever any consumers are. And so as something like TikTok or Snap starts scaling and growing quickly, we're going to be there and ride those tailwinds along with them. So the way that we know where consumers are headed is we try to be everywhere they are currently.
And then moving beyond the US market, international expansion was highlighted in the presentation, and it's been one of your high growth areas. With international revenue 12% in the first quarter of 2021 compared to 5% in the prior year's first quarter. Talk to us a little bit about international growth and how System1 is going to attack that huge market as well.
Yeah, thanks for the question. So, a few years ago, we were just absolutely crushing it in the domestic market. And it's pretty natural for us to start looking at international. I think, as all of your viewers know, international digital marketing is, more than half of the total global market. And so we took our approach, which is, advertising on platforms domestically, sending them into English language articles, and really replicated that international. And so we started moving into places like the EU and UK, Canada, Australia, primarily English-speaking languages at the start. And over the last year and a half, we've started translating our content into Spanish, German, French, all the international geographies. And we're seeing enormous growth. We've actually updated these numbers, and we'll be providing new guidance this week. But international is a really rapidly growing segment for us, and it's not going to slow down. Like every indication is, we'd like our international revenue to index pretty closely to where international does as a whole in the digital space, which is 50% or more.
Perfect. And then you mentioned, financials at the start of the interview, right? We see a lot of startups go public via SPAC, right? And System1 is not a startup. We have real revenue. We've also got some real earnings. So let's start with revenue. $580 million in fiscal 2020 and projected 763 in 2021. Compounded annual growth estimates of 31% through 2022. Talk to us a little bit. How is System1, able to, continue this growth going forward? I mean, look at that chart there. We've got some steady climbs with revenue. Walk us through this, how System1 can do that.
Yeah, I mean, we feel like we've got a little bit of magic in our RAMP technology platform. We believe we're the best, without sounding boastful, we're the best digital marketers on the planet. And when you're really good at finding customers for advertisers our discussion with advertisers, they just want more and more and more of our business. And so on the advertising side, it's really kind of basic blocking and tackling for us. We're going to continue increasing ad spend profitably. We're going to be going to more international markets. We're going to be increasing the advertiser verticals that we generate revenue in. That's something we've been doing really since we started the company day one in 2013. On the subscription side of the business, pretty much more of the same. The team at Protected does a really great job. They got a fantastic product team and can roll out new subscription products one by one. We already have 2 new products in market, an ad blocker product, and then a product that allows you to surf the internet securely. And so we'll be rolling out some more privacy and subscription products. But when you really look at consumer subscription products, we tend to think there's a lot of different markets we could disrupt. And what I mean by that when you look at products like, things like web hosting or online backup, those products are really differentiated by their ability to acquire customers efficiently. And because we have this, our RAMP platform, which we think acquires customers more efficiently than any other platform out there, we intend on the subscription side to continue rolling out products across a bunch of consumer categories and scaling those businesses using our RAMP platform. So, looking ahead, we don't see any slowdown in our growth. The advertising and subscription sides should both be, got a lot of runway ahead of them over the next few years. And like I said, we've already increased our guidance once since Trebia, we announced a deal with Trebia, and we're going to be releasing updated guidance coming up this week.
Perfect. Yeah, we always like to see, increased guidance after the SPAC deal is announced. That's always a breath of fresh air. I want to talk about your brands again. You've got a slide that shows off, those brands. And as I mentioned, MapQuest, Info.com, How Stuff Works. Those are the well-known ones. Give us some highlights. The other brands, maybe which are some of the high growth brands that maybe people should have on their radar from your portfolio of companies?
Yeah, absolutely. So I'd like to draw everybody's attention to StartPage. It's the second largest private search engine out there, and we call it the most private search engine. So that's one that's well known, got millions of people using it every single day. Some of our other emerging brands that we've got are Cars Genius, Wallet Genius. There's a whole plethora of them. Some of them super well known, others of them more niche. We have Legal Boulevard, which is our legal search engine, and we're always either acquiring new brands or creating them from scratch, and that's happening on a regular basis. So on a go forward basis, you'll be seeing us continue to do M&A. M&A will be acquiring additional brands that we can push through the funnel. We'll also be looking at acquiring some smaller subscription businesses that we think we can scale pretty quickly.
Yeah, I mean, that leads into, a couple questions here, Michael. M&A, you've been successful with, right? We saw that in a couple of the slides in the presentation that you've been able to acquire brands, integrate them into the RAMP technology. Are there any specific verticals you're able to discuss, that you're looking at for M&A? And just to clarify that there is no M&A priced into current financial projections.
Yeah, that's correct. So if you look at our historical financials and our forward projections, there's no M&A. Our historicals are pro forma for M&A, and on a go forward basis, we're not anticipating any M&A in the numbers. That being said, we've done a great job of acquiring businesses. We've done deals on a regular basis, historically at very accretive EBITDA multiples. On a go forward basis, we're not yet releasing any deals that we've got in the works, obviously, but you could expect us to buy some sites that would complement our existing areas that we've got. There's a few areas where we don't currently play in the market right now. Like we don't do much in, for instance, the Amazon ecosystem. That would be an example of a acquisition we could do that would, increase our total addressable market quite a bit. And then, as I said, on the subscription side of the business, we're taking a look at, tens of products right now that we know we could push through the RAMP platform. But really, our biggest challenge on M&A is just maintaining our discipline. There's literally hundreds of companies that we can acquire that we can accelerate their growth with our marketing platform. But we try to be very disciplined about buying the right companies, be very certain we're going to do them at accretive multiples. And for us, also, the culture of the company that we're going to be acquiring has to fit our culture. And we've got to be able to take their technology and integrate it into our technology platform.
Perfect. Well, Michael, I've got a great question here from the chat. That's one of the things we love doing here on SPAC Attack. Solar Up, one of our loyal viewers, said that a lot of these companies were built before Apple's privacy policy change. How has this change affected their revenue and forward business plans? I know there's a slide in your presentation talking about how Google has changed. Can you fill us in? How have the Google changes and Apple changes affected your business?
That's a fantastic question. So the Google and Apple changes are primarily focused on eliminating as much as they can third-party cookie advertising. That's the kind of advertising that's kind of intrusive and a little bit creepy. When a company follows you around the internet and you have no idea how the company knows about you. We're very fortunate at System1 that we don't do third-party cookie advertising. We're what's called a first-party cookie company, where we're using only first-party data, where a consumer has chosen to come to our websites and let us know what they're in market for. So the changes that Apple and Google are rolling out are affecting the third-party cookie advertisers, which has the, at least for System1, the happy benefit of giving us some tailwinds as those competitive advertisers kind of drop out of the market. Our system works even better.
Perfect. Yeah, Solar up in the chat. Thanks for that great question.
Absolutely.
Well, Michael, this was fun. So joining us again on SPAC Attack, Michael Blen, the CEO and co-founder of System1, company going public with Trebia Acquisition, ticker TREB. And Michael, remind me, what will that new ticker be when System1 completes the merger?
So we're gonna be going with the System1 name, and we're gonna be going with it's gonna be ST.
I put you on the spot. I couldn't remember the ticker.
SST, and it's a joke internally, but SST both means supersonic. But it's also the name of the iconic punk rock label SST. So we got a lot of punk fans at our company.
That's awesome.
Yeah, so hopefully all of your viewers remember SST.
Well, after that description, I know I will. So hopefully everyone out there will remember as well. But Michael, thanks so much for taking time out of your busy schedule, joining us on SPAC Attack. And we look forward to following the progress of your company as you work through the merger process.
Thank you so much for having me. Appreciate it.
Awesome. Well, guys, you heard it here on SPAC Attack, right? System1, an advertising company with some great well-known brands, a portfolio of over 40 brands. Mitch, what do you think? I'm liking this one. I like their proprietary RAMP technology, right? You saw it in that video we played before the interview. And also I love being on top of trends, right? The mention of Snapchat, the mention of TikTok. That's something, we know well at Benzinga, right? You've got to move where the trends are.
100%. You got to know those trends. And one of the things that I've been looking at is looking for also, I wanted to see some of this DTA kind of attempt here, but some companies that can stand out to me, some newer companies, some companies that are growing, like Lemonade, Lending Tree, Quicken Loans. Those three really kind of stand out to me as companies that are really viable, growing. They're going to probably require more and more. Right, as they grow, we probably will also see System1 kind of get that lift in the revenue. So I'm going to be looking at companies like this because those are the companies that I think could continue to drive. Because of course, there's going to be these smaller companies that come in and out into their business, but the bigger companies, I'm sure, drive more of the revenue. That I'm going to go ahead and take a deeper look to find out which customers are the most important. So we'll be looking after that and paying attention to that. That's what I'll be looking forward in the next earnings.
I got to throw up some of these comments because I know we have Michael in the background here. That SST ticker getting some love in the chat here. SST, I'm in because of the ticker.
Hopefully not just because of the ticker.
Not just because of the ticker, because you just heard why on the show. But yeah, love the ticker there. Great reference. Mitch, I love the international too, right? You're talking about a business here where they have real revenue, they have real earnings, and they really haven't attacked the international market as aggressively as maybe they could have, right? And now they're going to. So there's your growth engine right there too. We talk about, where's the growth? Well, you have it, right? They're integrating more brands, they're growing the RAMP network, and they're expanding to new countries. So to me, that's a great sign for growth.
Definitely. I mean, when you got some international, you got some domestic, you got some areas to continue growing into. That's what SPACs are all about, right? Essentially, it's looking towards a stock that can grow and you see an actual outlook, not just these ones that I say, there's baskets, right? I always talk about my baskets, right? There's pre-revenues, there's the ones that have some revenues, and then there's more stocks that I can see. This is just a business and it's just going to continue running. Whether these are going to go to the moon, who knows to that? I got to say that those are the baskets that I'm not really worried about going to the moon, but it feels like a much safer investment than the basket all the way over here with the pre-revenue, like kind of forward-looking ones, like, are we ever going to get there kind of companies. This is not into that basket. I'll go ahead and I'll throw it into the right basket. So, hey, we'll be paying attention to see what happens with the stock. Right now, I think it was trading just underneath 10, but let me check it today. I was taking a look at it. Yeah, it's at 9.95. So, hey, you know how we talk about getting these before they make
great
the run.
risk reward here. Great risk reward.
At 9.95, it's definitely something to add to the watch list. All right, I'm going to go and have some fun. I'll let Chris lead here on the watch list and probably tell you guys some stocks. It looks like I am having a fun voice game.
Yeah, there's a lot of things that they want you to say in the chat to copy some of these movies.
Want to play a game?
Mitch, I'm loving the voice. But I mean, I know it's not your normal voice.
It's
Meta Mitch.
Mitch.
Maybe you hung out with Mark Zuckerberg and you wanted to be part of the metaverse, and you are fully integrated into the metaverse. But yeah, I mean, so hopefully everyone enjoyed that interview. Again, ticker TREB right now, SST upon the merger change, System1. Let's dive into our watch list, though, and take a look at what is moving out there.
Let's do it. Let's go ahead and head towards the watch list.
Sometimes left alone in the hill tonight.
All right, guys, going to go ahead and bring up my watch list. Had to do a little refresh here to make sure we get some active data right here. All right, so like always, we're going to take a look here and see what's the top movers standing out for me right now. Looks like I got a skin up here. Do you know this one, Chris?
Yeah, so skin is beauty health. This is the like hydrofacials. So
dude, what are we doing? We're doing it all wrong, man. We should be looking at the hydrofacials.
I mean, I guess so. This is a possible reopening play, right? Because a lot of those businesses weren't seeing people come in.
Missing out.
I know this brand is well known in Asia as well. I think they have some celebrity endorsements as well. So, and if I'm not mistaken, Mitch, I think they have earnings this month too. It's hard to keep track of all these November earnings, but yup. Tuesday, November 9th. So 1 week from today, Mitch, Skin has earnings. So this could be a stock to watch if it can continue that move up.
Yeah, one thing I'd say is I love when I see moves like this. This is a clear A, B, C pattern going towards the D move. Nice patterns holding. You can see how it holds sideways. Doesn't really do one of these moves where it's like really choppy. Sideways action again, support here, nice breakout. These are the type of stocks that I like to trade, Chris. When I can see patterns like this that are clear as day, why not, right?
Yeah, definitely.
All right. Let's go ahead and take a look at some other stocks. Stock that stayed strong. A lot of people just don't even pay attention to Porch Group. Chris has heard me mention this stock, how I've always impressed how strong it stays, even when it makes that run up. And it comes all the way back down to 16. Look at this next run up. Just as strong. The run ups it's ladder ups, ladder down in this game. What are you thinking here in Porch?
Yeah, I mean, Porch, they had some news. Was that in yesterday's headlines or maybe an analyst note? I know we talked about this one. over the last couple days. Yep, Loop Capital initiating coverage, a buy rating, and a $30 price target. If you look at the chart on this thing, it's kind of traded, within a range and really just is looking for that breakout, right? And you've got it highlighted there on the chart. I mean, this is an end-to-end platform. It's one I've liked for a while. Another great company that went public via SPAC that people probably don't even realize was a SPAC deal when they hear this company and see that chart.
Yeah, these are one of those that I talk about all the time. And a lot of people tell me, oh, but SPACs are so bad. I mean, Porch is looking not too bad there. Let's keep going down the list. Wheels up about 5% today. Do you see that move there, Chris?
I didn't even see that one. So up, 778. So this could be another one of those, de-SPACs under $10 where it's starting to get attention again. And this is another earnings play, Mitch. They've got earnings next week, November 10th. I mean, pretty much if you're a company that went public via SPAC, you have earnings this week, I swear, based on the Benzinga Pro calendar. So Wheels Up, they've got some celebrities involved in this one too. Some celebrity investors. This is private aviation. I'm looking forward to hearing what they have to say with an update on earnings.
Yeah, we'll keep a watch on it. Another one making a move up from the lows of the lows. TMC, a little bounce there, 3%. Not much there, but definitely, I mean, if you want to go bottom fishing, it's getting close towards that bottom. It's down to $3, Chris.
Yeah.
Definitely a downfall that you probably didn't want to be holding through. So if you got stuck in that name, I feel bad about that one. But let's just keep rolling. Let's look at a couple other ones. Joby also up. Interesting. We've been talking about this day 2 move here on Joby. Definitely getting on up there, pushing on up. I mean, these are random ones. I think they might not last, but I mean, Joby not doing that bad. We also saw a different one moving yesterday.
Archer we highlighted
Archer,
yesterday.
there you
Joby
go.
could be the sympathy play in the makeup trade there with Archer. Good call out, Mitch. These EVTOL ones, also Blade BLDE, I know has been a popular ARC one. So it looks like maybe EVTOL is getting some, trades here. And it could be people trying to pick either the leader or just kind of get into all of them, right, with the basket approach. So, something to watch out
There's
for.
Archer right here.
But yeah, every day now this week, we've seen one of these EVTOLs kind of pop up on the leaderboard. So that's very interesting. Mitch, I got to highlight one here. If you could pull up CND, Concord Acquisition Corp.
Let's do it.
And this is why, if you do not have Benzinga Pro, I saw an alert on Benzinga Pro that said Concord Acquisition CEO to be on CNBC. So that is a catalyst, right? Whenever these CEOs go on CNBC, and this is an interesting one because this is the company that is bringing the Circle public, and this is the USD coin creator. So if you know crypto, you know the stable coin USDC, and there actually was some positive commentary yesterday on stable coins and the CEO going on CNBC. We could get some comments from him on what this means for the company. So CND not moving much yet today, Mitch, but I have a feeling that CNBC appearance, we could definitely see some attention on CND.
Well, there you guys have it. You get a push up, a pull back, a push up, a pull back. Now a push up. Now it just needs to hold support there at 1140s. Get back on up there through the 1150s. Break out through that 1156. You want to see some volume increase into that move. I do think that some people got long right around this area from 1140s to 1150s. So that's where a majority of your traders are trading right now. So if you do get above that 1150, I'd look for the breakout. We'll see what happens here. CND, as you mentioned, could be on CNBC. I don't know if they're still on. I know they were supposed to come on at 11. So we'll see if they're still on. I haven't seen anything on that.
I
but
haven't seen an update
guys
of what
don't-
was said or if that appearance already happened. If you're in the chat and you happen to be watching CNBC and not us right
Hopefully
now,
you're not,
hopefully you're
but-
not. But if for some reason you were, right, because you cared about that interview, I guess I can understand that. Let us know what was said about
we'll let it go.
CND. Mitch, another thing I forgot to put in headlines today, we talked about this off air yesterday. So Rivian, right, is going public, and this could have an impact on electric vehicle stocks. But the other stock to watch here, Mitch, is SoFi, SOFI. According to the filing for Rivian's IPO, they said that they will give retail investors access to purchase a portion of their IPO shares through SoFi's online brokerage platform. That is directly from the filing. So if you want early access to Rivian shares, SoFi appears as of now to be the only retail broker to offer that early access. Mitch, could that be enough of a catalyst for SoFi, right? Rivian's going to be one of the hottest IPOs of the year. I think a lot of people want to get in. Is that enough to get people to open a SoFi account if they don't already have one?
Well, I'll tell you one thing. There's a lot of people that were getting into the boat yesterday. So as you guys can clearly see by that volume spike yesterday that you see right here, there was someone thinking it was bullish. So today is just kind of more of a news to kind of keep it in relevancy, I would say. It's not necessarily something that I think pushes it over the top, not something that hurts it, but definitely keeps it in the investor's eyes. And that's why I always talk about news flow. This is news flow. Continue the news flow into the earnings so that when you get that news flow that's positive, it actually brings the investors, they're watching it. You get what I mean? When you bring out catalysts, always remember what happens. When we get catalysts, what happens is investors' eyes go on the stock. So what you want to see is a lot of times if you're looking for a stock to continue being bullish, you want to continue to see the catalyst come out and out. It doesn't necessarily always have to be the best catalyst, but you want to see them spending money to put out PRs. Because PRs are not free, guys. You got to pay for them. And you know how that one goes, Chris, right? You're not going to put out a PR for no reason, right? You're going to put it out for a reason. There's that. That's what I focus on, guys. That's the story. Let's focus on that. The story is SoFi right now. Keep it relevant. Let's see that bank charter come in and see that lift come into SoFi.
I just want to highlight in the chat again, that was directly from the filing, but we've got some insight here from Cole, one of our longtime viewers, saying, I just got offer from SoFi to buy Rivian. So that is true.
What?
If you have a SoFi account, it looks like you are now getting early access to Rivian shares. So I don't have a SoFi account, Mitch, which is weird because I'm a SoFi shareholder. But I might have to take a look at seeing if I can get in on this IPO by signing up for SoFi. So great call out on the news cycle, though. I mean, SoFi has had some great positive news lately. And I mean, the chart reflects that, right? That it's getting continued attention and continued positive news flow. So what else on the watch list? I feel like we touched on a lot of them. We do have earnings later this week. Maybe we can look at some of those. Who was this week? We've got MP Materials, Nikola, and DraftKings, I know are the big three. I don't think we're seeing big moves in those ones yet, but those could be on watch tomorrow or the next day with the earnings.
Yeah, something definitely to keep on watch whenever we have these earnings, and especially lately, they have been definitely affecting these stocks. So keep it on watch. Yesterday, we went through a lot of the dates. So if you didn't catch that, I would definitely check that out, guys. We've been going through these dates like crazy, trying to get you guys prepared for the month. And we've been doing this every single month. So definitely, guys, if you haven't seen it, check it out. I want to get you guys over to take a look now. Let's take a look at the big mover that everyone's focusing on, which is Lucid. Let's take a look at Lucid and see what we're seeing. All right. So Lucid's having kind of another pullback type of day here. We'll see what happens if it can continue to pull back. But what are you thinking, Chris? I mean, now that Lucid's kind of in this chop zone after this push towards 40, what's the next catalyst that could be coming into maybe the stock to get it off of these levels?
Yeah, so I mean, the next catalyst is the delivery numbers. How many cars did they actually deliver? And they report earnings on November 15th. So I think we're going to see that news shared with the earnings release, right? And I think maybe you also see CEO Peter Rawlinson go on maybe a CNBC, right, to talk about their delivery, talk about their earnings. Yeah, I mean, you see that chart, and I think it's very telling, Mitch, right? This was a buy ahead of the event, right? We knew that they were going to do deliveries on Saturday. So I think the time to get into this one was up to that event. Now you're seeing some profit taking. The other thing, which I think a couple people called out in the chat, Lucid was getting high mention on like a Wall Street Bets and some of the other forums. Those forums tend to go, where the trend is, right? So maybe today they're taking profits in Lucid and going after a different stock, like maybe an Avis or something that's high flying, right? So I think Lucid's going to see some short-term pressure. But again, I think, going into the earnings and the delivery release, that's the next big catalyst here.
All right. Well, I actually think that, this kind of sell-off is expected. I talked about I want to see a 50% retracement of this candle. So we're kind of getting into that zone right now. This is what I wanted to see. If we can get on up through 40 in the next couple of days, I think this still looks like a rocket. So just stay tuned, guys. I know that a lot of people are thinking maybe that they're switching onto the momentum play, but a lot of the people that have been in Lucid are more longer term looking, and they're looking for what? They're not looking for a pop to 40. They're looking for a pop to 60s, 80s, 100. That's what they're looking to sell. And those are the type of investor that's in Lucid right now. And it's more of a cult-like following stock. So what I'm looking for is continued momentum buying into this pressure. So if you look at the tape, we want to see is weak bottom candles. So weak kind of this wick, lower wick, and closing up green. If this candle ends up closing up green today, it's going to be a good look. You know what I mean? Even if it pulls back and kind of closes near this level, we'll still be looking good because we're starting to get a retrace of this couple weekdays. But now I want to see the next day start getting strong. So tomorrow I'll be looking for Lucid to get really strong and break out through at least 40. That shows me that continued momentum that it wants to run now versus developing like a week-long pattern or a monthly-long pattern. So right now we're looking at the daily breakout type of pattern and looking more into the what I would look even into the 1 hour chart. This is when I love to look at the 1 hour chart, and you see how it gets a little clearer there, Chris. It seems clear, right?
Yep.
I mean, a run up, couple runs, and what do we look for always? We talk about this constantly. We want to see a couple runs up, the three rule, right? So 1 run up, 2 runs up, 3 runs up, coming back down all the way to support. And now if it gets that 4th run, aren't you going to be feeling a little bullish when it gets back up there?
Yeah, definitely. And I mean, that 4th run, it could happen anytime, right? And especially with a catalyst like earnings and delivery numbers coming. So I think November, it's going to be a big month for some of these EV companies, right? Like Lucid and Fisker with the auto show. So definitely keep these on watch if they're not already, guys.
I got one more. I'll go into overtime. I'm not going to let you down. Reason why I'm going into overtime, I put this in the title. I'm not letting you guys down, the viewers. I'm not trying to do clickbait here. Look at BKKT, Lisa Lee coming in here. And I like the last name, Hunt. If you guys don't know, race movie, Hunt, James Hunt. I love that movie right there. BKKT. All right, let's take a look at it and what's going to happen with this rocket. This has been one of the ones that I really wanted to talk about today. Look at this, Chris. What are you thinking, man? We rocketed back up, came all the way back down to 20, then pushed on up. Yesterday, I was actually talking about this with Carl. I was telling him to buy 19s when it was coming down here. But as we can see, it's not there anymore. We'll see if it can kind of hold these levels, but it's it's pushing, guys. It's pushing. It's trying to get back up.
Yeah,
there.
and I mean, I know it did halt at one point yesterday, which it had halted before during that big run up, right? And that was actually when I owned some shares, and I sold out, on that run up. And this is one where if it pulls back, I kind of want to get back in. I really like their cryptocurrency platform. I like their interest in the sector. I want more exposure to crypto in my portfolio, right? Rather than just, the actual crypto. I want the platforms, the companies that are helping, and this news for Backed, right? That they are working, with MasterCard. That's a huge partnership, right? MasterCard is one of the biggest names out there. So this is one that's on my continued watch list, Mitch, to get back in.
Yeah, I'll keep it on watch. I mean, it's so strong. It's incredible. These are the ones that you definitely got to keep an eye out for, because when they go, they go. And I've been actually looking at a lot of kind of these cryptocurrency plays, not only BKKT, looking all around. I even saw MicroVast, not Micro, is it MicroStrategy?
Yep, MicroStrategy.
MSTR.
Yep.
That one, big stock starting to break out. I called it out earlier today. It looked really strong. Look how it's pushing right now. And this is crazy. I didn't expect this, guys. I expected to look at it and see it up like 5%. Now it's up 13%. That's some strength into that push. This is that crypto push that we've been looking at. So you guys know how I like to look at industries. That's the reason you're seeing BKKT move up like that, because it has that potential. And with seeing other crypto stocks make moves like that, you could see this continue.
Definitely.
So that's going to do it for us today. I mean, as you guys can see, a lot of stocks going crazy out there. It's one of those parabolic times. This is when I tell you guys, it's always important to know when the river's flowing and when the river is dried up. There was a period there when the stocks were getting hurt, and a lot of swing traders and day traders were giving back profits. This is what I talk about, how the river is drying up. You got to read it quickly so that you can hold on to your capital and know that when the times are flowing, when stocks are going to the moon and you're seeing a bunch of stocks just rotate up, that's when you want to go ahead and nail down and invest hard and push some cash into your portfolio, because that's when I've seen that investors really can go after stocks. Sometimes you even get lucky. Sometimes you even pick a stock that probably would have gone down, doesn't even have the best fundamentals, but goes up. Why? Because the whole market's going up and everything's going parabolic. I mean, why not jump on the boat, right?
Definitely.
And so that's how it is a lot of the times. I hope that you guys out there enjoying your SPAC investments. That's why Chris and I do this, because at the end of the day, we want you guys to be informed and be able to know these companies like the back of your hand. And I think that SPACs Attack definitely gives that advantage. So you guys let us know if you guys get that advantage from SPACs. And we'll see you next time. Like always, up next, they're going to talk a lot about CAR, Avis, going to the moon, up past 500, over 200% move on a $180 stock when it started the day. Man, check it out, guys. I mean, if you guys don't believe it yourself, just see it.